record button on my side, and then we'll get into it. So a little bit of basics about the Moxie indicator, what it is, and how do we work with it. The couple of biggest things to note about the indicator is the zero line. So that is this gray line in through here. And what it is, well, zero line. We're positive above it and we're negative below it. That's pretty simple. So if you're going to be making a bullish trade, you generally want the Moxie indicator to be over zero. That's going to give you the best situation, the best setup, and that's what's going to work out. The other thing to consider is the height of the Moxie indicator above or below zero is how much gas is in the tank. So if you're bearish, you actually want the indicator to be very far below zero, because then you have a lot of gas in the tank to the downside. But as you start approaching closer and closer to zero, you're running out of gas to the downside, and you're actually going to start going positive, which if you're bearish is a bad thing. You want to switch. If you're bullish, then you want it to be very high, and when it starts getting towards zero, you need to watch out because you're running out of gas in the tank. The other thing to be noting is divergence. So divergences, and actually what we could see in through here, this was a pretty good one. This is on the daily S&P, and this was a longer term signal. I'll find another one that we can look at that's a little bit more near term. But if you look here, notice how the Moxie indicator was very gently rising. It was like red, green, red, green. That's mixed. You actually, if you're going to be taking a good, strong trade, you want it to be just solid green or solid red, whichever direction you're going. And so the fact that this thing was meandering kind of below zero and just barely crossed over zero and was up, down, up, down, up, down, was telling us that this was a very weak signal. And you can see that while we did have a move up, it did finally bite. And then, you know what? That was actually the beginning of the end of the move. So that was it. That was telling us what was going on through there. Another thing I can show you real quick, Apple on the hourly chart has been pretty good. This is a form of that negative divergence that we're talking about, plus how much gas was in the tank. So when this thing first started to move right here, you can see that there was quite a bit of gas in the tank according to the Moxie indicator. And it was not running out very quickly. This was actually doing a really, really good job. That's why you don't really want to be shorting into something like this until you finally get the signals. Well, look at the signal. So that's a Moxie price trigger. You'll see these red and green arrows. I call them Moxie price triggers. Basically, all they do is they correlate between the Moxie indicator crossing over zero, so you get the green, or crossing below zero, you get the red. Just in my time of building the Moxie indicator, studying it, working with it, I found that it was really important to know when the Moxie indicator crossed above or below zero. And so I had the programmers, basically just make some things on the price charts, because it was hard to correlate, straight down and look. It was much easier to have a visual signal right on the price chart, and so that's what we did for that. And those divergences are what we look for, and you can see right here was a nice one. So price down, Moxie indicator up, and then you get your Moxie indicator firing right there. And so that's your divergence. So divergence for both positive and divergence for negative. It's important to know and see that what's going on. Sometimes they can be very short term, very quick, and that's important. Or sometimes you can see when there's a lot of energy, a lot of momentum. With Apple, you can see that divergence was slowly coming out. And again, look at the timing. I mean, that is perfect timing. You cross below zero at the same time that price is basically giving it up. That is the end of the trend. And if you look at this with Apple, I mean, look, if you run just the Moxie price trigger, I mean, this thing's nice. Here's your Moxie price trigger to the upside. Here's your Moxie price trigger to the downside. And I'd say you caught 95% of that trend. I mean, it doesn't get much better than that. I mean, this is a really, really good example. Another thing that's in here that I wanted to show you guys is the concept of a trampoline move and an inverse trampoline move. Now think about it. As simple as the name is, trampoline. What do you do if you're ever a kid and you're up here and you're jumping onto a trampoline and you kind of go below it and it shoots you back up, right? Because the frame of the trampoline's like that, but it's stretchy, so you shoot down, the springs get taut, it shoots you back up. Well, take that same concept and think of the 50 SMA, which is this magenta colored line. Think of that as the trampoline. And so you can see that price is up here, it's coming down, it hits the trampoline, goes below it, those springs are stretching, and it shoots you up like that. It's exactly like that. And what the combination is price below the 50, but the Moxie indicator above zero. Because the Moxie indicator being above zero is indicating upward pressure, still gas in the tank, upward momentum. It wants to go higher, and yet price is going down. So you're thinking, okay, conflicting things. What's going on? Well, it's getting loaded. price is getting below the moving average, which it shouldn't be, and with the Moxie indicator above zero. And so what it does is it's tightening those springs and it's shooting up. It's also like trying to put a beach ball underneath water. You know, it's got so much buoyancy, it doesn't want to be down there. It wants to shoot it back up. And so that's why I look for both the Moxie price trigger to work with the two-part entry rule, two-part exit rule. I'll tell you that in a second. And then also trampoline moves. They're fantastic. And you can see here, a little trampoline move and a little trampoline move. That's basically, it's a way to buy the dip. It's a great buy the dip situation, and it helps keep you on the right trade. It makes you so that you're not shorting something thinking, oh yeah, here it goes. It's going to break that moving average. Better short it. It's like, nope, Moxie Indicator's actually kind of telling you, like, you might want to be going long on that. This might be a really good buy the dip situation. So that was a good example there. Another thing you want is, let me see if I can find this one. This is a good example here with Apple too. There we go. This is perfect. So here on the hourly chart, the two-part rule is you want price over the 50 and you want the Moxie indicator at or crossing over zero at the same time. So timing is important. And let me show you this timing. So here is a good situation. Here you have the Moxie indicator crossing at about the same time that price is crossing over the 50. That's good timing. The Moxie indicator can also fire before, like it could be a leading indicator. So that's good. You can have the Moxie indicator, momentum, all that go green before price moves. That's fantastic. Or at the same time. But if it's late, then it's a problem. Because then what happened, it's kind of like the tail wagging the dog. Then you had price pull the indicator above zero, not the indicator. You want the indicator to lead. You don't want the price to lead. Here's an example of where the tail was wagging the dog. The price is what pulled the indicator up over zero. Because you can see here, so is earnings, news-based event. Okay, maybe things got oversold, all that kind of stuff. And you can just see how strongly price moved up. But look where the Moxie indicator was at the time. It's down there. There's no signals. It's so far away from being positive. There were no actual signals. This was a news-based event. It was maybe a short covering. It was all those kind of things combined. But as far as a serious setup on the Moxie indicator, it just wasn't there. And what it told you is like, okay, so if you're looking at this, you're doing your scan, and you see that the Moxie indicator is fired up there, like, okay, great, let's go in. Not quite. It's late. It's delayed. And what it's telling you is that this was price that pulled the indicator up, and it wasn't a good setup, and you know what? It's probably going to run out of energy fairly soon. And then what did happen at the correct time, you can see the Moxie price trigger to the downside. That was on time. There is price at the 50. There's the Moxie indicator going below zero, and that was a good move. That's something that you can actually catch using the Moxie indicator. This first one, just news-based. So, and then you can see over here, better situation leading up to it, price down. You can see Moxie indicator double bottom. That's positive divergence. There's your price trigger. Boom. Next move. So that one was really good. So let me take a look. Yeah. So I think the other thing to kind of mention are stair steps. So, when I was learning how to trade and everything, there were all sorts of indicators, RSI, stochastic, MACD, like you name it. There were all these things, and they were basically squiggly lines. And when I was trying to learn how to trade, it just was not making sense to me. I couldn't define enough of a time when a squiggly line was starting to turn. Or, through here, I couldn't really tell when, say, one line was starting to cross over the other line, and I couldn't tell what the angle was, and was it sharp enough, and was it expanding? It was just really way too hard to be able to put anything concrete on these squiggly lines. How long were they over, above zero, below, like in this range, all that kind of stuff. Like, can you see the two of them crossing? Like, you had to get down there with a microscope and actually figure this stuff out. So when I was designing this, I was like, okay, how do we make this look better? I need something that's a little bit just more straightforward, that I can see, that I don't have to deal with this interpreting of a line. And so I figured, well, let's make it boxy. Let's do moment by moment, and let's capture each one of those moments and just turn into a block. And so that's what I did in through here, and that's why I call them stair steps. So I made them stair steps, and that tells you, it's like a picture is worth 1,000 words. I'm telling you, there's so much information here. The great part of it is you can see when they're really big momentum steps, because you can see the distance from each level, like big step, big step, big step. Like that's a lot going in there. And that's a lot of energy. So you can see that quickly filled up that gas tank and shot this thing up. But then, as it starts going up there, you can see price kept going higher. Oh, now look. Now you can clearly see that there is some negative divergence in here. And we're getting higher prices, but we're doing it on less energy, less gas in the tank. that should tell you something, that there's some negative divergence in here and you need to be aware and see if something's going on. And sure enough, it started to roll over and fail the moving averages, and now you can see that the Moxie indicator was accelerating to the downside. And so those are very important things to notice in through here, and using these stair steps was also very important. Let me look over here on Microsoft, here on the daily chart. Here's another form. And you can see, like right in through here, that even though price kept going up and coasting, it was another form of negative divergence. Like notice how price kept trying to go higher, but the Moxie indicator really kind of coasted right in through here. Didn't really do much. And you could see that those stair steps. Now, maybe you don't go short, and maybe you don't panic out of your long positions. It's okay. You know, you still got a lot of gas in the tank. But what you're noticing is, well, it is negative, but it's not super negative. Like it's not this. You know, those stair steps, those are big energy stair steps to the downside. You better watch out. It's probably going to pull back. But when you get like a little coast like that, you're like, oh, okay, well, you know, it's okay. It's doing well. It's kind of hanging up at the top end. It's coasting. And that is the difference between these stair steps. You can see that this was very mild versus this is very aggressive. And you can see this on the long side and the short side, you know, upside, downside. And that was another thing that was just really important to be able to see these things and define them. You know, you can clearly see when the bars are red versus green, and that helps you just recognize and identify the whole thing of maybe when things are starting to chatter a little bit. And that's also really important, kind of like what I showed you on the S&P. So let me then show you a couple other techniques. So in a bearish market, the inverse trampoline concept is a perfect short setup. So right, with a bearish market, you want to short the rips, you want to short the bounces. Well, how do you figure out when those things are? Like, how do you figure out when is actually a pretty good idea to do that? Well, for this situation, I really like the inverse trampoline move. And an inverse trampoline move is when price is over the 50, but the Moxie indicator is below 0. It's the same thing as a regular trampoline, just opposite. And price should not be over the 50 if the Moxie indicator is below 0. It's telling you, like, hey, okay, so I'm in an uptrend, I'm over the moving average. According to price, I should be going up because this looks good. But you know what the Moxie indicator is doing? It's telling you, like, hey, no, momentum's still negative. Like, it shouldn't be up there. So it can push for a while, but be on guard for either you need to not go long or you go take advantage of a short situation. And that's exactly what happens is when this thing finally rolls over, there you go, you got your short. And I can show you that on the hourly chart. We had the S&P had a couple of them. Here is a good one, right? A couple of them, right in through here. Notice once again, if you're only trading using price, I know they say price is king, but honestly, price is kind of a lie. You know, they trick you with price. They're gonna pop it right up, and you're gonna look at this, you're gonna get suckered in on a move, and then it turns the other way. The Moxie indicator is here to help you with that, help guide you, tell you what's the overall situation. Like, don't get faked out and fooled thinking that, oh yeah, here we go, we're gonna bounce, we got over that moving average, it's great. No, look at the Moxie indicator. It's below 0. And there was no setup. There was no divergence. You know, price down, price up, Moxie indicator down, Moxie indicator up. There's no divergence. And so you look at this, and if you're savvy enough, and you're like, nope, that's just a bounce and a downtrend, and you can then figure out how to go short on that something, boom, there you go, you got a short. And same thing here. Here's another one. Price up, Moxie indicator still below 0. It was a fake move to the upside. Go short it. How about another one? Same thing. Price up over the 50. Moxie indicator below 0, short it. So those are good bearish signals. What about bullish? Well, we come in through here, and you can see once again what we got right in through here. Price below the 50, Moxie indicator above 0. Boom, move up. Now this one was trying to hammer out a bottom. There were still moving averages in the way. There were still some things. But what you'll notice is, again, even on this pullback, Moxie indicator above 0, trampoline move, boom, move up. So you can see that in through here, we were starting to get some positivity. The Moxie indicator was starting to stay over 0, telling you, like, look, I understand that price is going down and price is down and move below the moving average, but you know what? The Moxie indicator is trying to tell you, like, no, momentum is still up. So I might be trying to get my stuff figured out, but momentum's trying to go higher. And that's exactly what it did. And that was a big, big short squeeze that we got on there. You can even see here with the S&P, here's some divergence. You know, price down, Moxie indicator actually made a higher low. Like, that's a big deal, especially what we've been seeing recently in this market. So again, this is a lot of the stuff that I'm going to be going over in this webinar coming up, showing you what we've been doing, kind of trades we've been taking. I've got a few other Moxie patterns and whatnot like that. And this is really just a touch. This is just an overview of how the Moxie indicator works. what to look for, how you might be able to incorporate it into your thing, and really just to show you. Because I know when I was trying to learn from other people and get started in this game, a lot of times people would present or whatever, and it was just smoke and mirrors. I didn't know how anything worked. They had some fancy black box indicator, or we went into the webinar and they didn't show anything. They just talked air for an hour. I don't even know how they did it. And so I want to show you now, this is real. This is what I do. This is what I trade. I've been using the Moxie Indicator for years, and it's pretty much the only thing that I use. And I just wanted to show you guys how this thing works in real live charts that we're looking at and dealing with right now, and how we're navigating the market. So I think that pretty much covers it, and we can then use that for some later stuff. It'll be really great. Actually 15 minutes on the dot, just like the first one that I made, so that's cool. So other than that, let's see, Popeye, is the Moxie Alert Red Green Arrow a new addition? No, actually that has been part of the Moxie Indicator way before I even got to Simpler. The thing, I don't think we've really added anything from Simpler other than we've actually made it easier to install the Moxie Indicator. It used to be that you had to have one indicator for each time frame that we installed it on. Eric is amazing as far as his programming abilities, and he made it so that it's only one indicator and it will automatically populate for the time frame that we've assigned it, which so much easier. Fewer moving parts, fewer things to install, easier to track, and that's great. The only other thing that I've added since I've gotten to Simpler that I think is a big deal is the third ATR. We call it the third ATR. It's basically Keltner channel based off of the 21 SMA, and it's the third factor. That kind of gives you the upper and lower ranges of where price is typically going to go, and helps give me that an idea of where the upper and lower price is going to go. So that works out really nicely. Yeah, Mirza, you nailed it. Awesome. Yeah, seeing you guys chatting in there, so that's good. And then yeah, JWM, welcome to Simpler. But yeah, it is an add-on. It's an indicator, and it's one that I built before I got to Simpler, and now it's here, ready for sale, and you guys can pick it up anytime you want. We do have some specials coming up with the webinar tomorrow. If you guys are interested, to go check out what that is, so be sure to register. Remember, I'll put this up here another time. simplertrading.com/catch. And you guys can check out the little video that I put in there too. It's always great when you pause on your face, right? You're trying to talk, you hit pause, and of course it's going to be a ridiculous looking face. All right, and then let's see, MA. I doubt there's really going to be much that I want to say for MA. Yeah, look at this chart. That is not what I consider fun. If you do want to trade something like this, you're probably going to have to find it on lower time frame charts. But that's just so messy that I can't really do much with it. I could maybe pick out a few things here and there using the Moxie Indicator, but it is so crazy, it's just not something I even want to really deal with. One other thing, let me see, HLF as another example that I had in through here. And right here. Yeah, so here was on the hourly chart, here was another form of that negative divergence. And I'm using this same thing from back, let's see, January 2022. This is the same formation that is currently forming in HLF. So I look back, I saw it in history with this thing. I was like, oh, it's doing the same thing. And that's the other thing about my style of trading, and what I'll be talking to you guys tomorrow during the webinar, is that I've basically written a small book, like a little, 2 sheets basically, of language, of the Moxie Indicator trading language. And that way, when you understand the language, we can all speak the same thing. We can identify stuff. I mean, that's what humans do, right? We have to put language to things. Otherwise, we're just grunting and pointing at things and saying that thing. And you're like, what thing? And once we put names to stuff, then we're smart. We can identify that. Now we can recognize that, and we can speak about it. And this is how we get more educated and better and progress with our society as far as language. But what you can see, so about that negative divergence, you can see price kept going higher and higher and higher. Notice that the Moxie Indicator was going lower, lower, lower. Now, it wasn't the worst thing in the world. It still had a lot of gas in the tank. Like, it wasn't beelining to the ground. But you should be aware that price keeps pushing higher and higher and higher, even though you are consuming and running out of gas in the tank. And then you can just see this again. I love it with the stair steps. You can see how the stair steps were very close to each other. Not a lot of momentum up, down, right? Very flat. But then what do you see? It starts to accelerate to the downside. You can see how those stair steps start getting bigger and bigger and bigger to the downside. And when you start seeing that, based on if you're long or if you're trying to go short, man, that's important. Okay, there's a lot of energy that's starting to go to the downside. And so when you see here, there's the Moxie price trigger telling you that the energy momentum has now gone from positive to negative. And what is it doing? Even though price is just flagging sideways, look at how quickly and how strongly that energy and that momentum is coming out of the price and going down. And that way, you basically can just catch it sideways, flagging right into that moving average, and boom, there you get it. Now you got to move. Okay. Now, of course, sure, it can bounced off a moving average here, but just to show you the repeatability and consistency of this, look at what we're dealing with Herbalife right now. It's the same thing. It's exactly the same thing. Look, we have price moving up. Notice that the Moxie indicator every single day is going down. Okay. Yes, there's still some gas in the tank, but given the other outer ranges and boundaries that you're seeing on these other time frames, this is a huge red flag if you're long, and this is a green flag if you're going to be going short, which we did. You can see we went short right there, right at the peak. Perfect situation. And I could see that because of all the other things that I talk about with the Moxie indicator rules and all that stuff. But the main thing that called me to this was this: price moving up, 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 Moxie indicator down, 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 down. Like, shouldn't be doing that. The Moxie indicator is warning you and telling you about something. And I'll even show you this on the 15-minute. The 15-minute was even clearer. Because look at this, price kept moving higher and higher and higher. Notice that the Moxie indicator just did not go anywhere. It was done. Why is price going higher if the Moxie indicator is not going higher? Or even down. Like, why is price going higher if the Moxie indicator is going down? It's trying to tell you that internally, momentum and energy is coming out of this thing and going negative. Like, I understand what price is doing. Price can lie to you for a while, but underneath the surface, there's a sinkhole forming. And you can see right here that the Moxie indicator really started to get nice and tight and actually started rolling over to the downside right as price started to break that moving average, and boom, you take that short. So just want to show you guys a couple real live examples that we are literally in right now, trading them, making some money off of them. And I got a lot more things I want to kind of show, talk about the market and everything else like that tomorrow. So yeah, tune in, simplertrading.com/catch, and then we'll kind of get you from there. Yeah. And yeah, short and sweet, just like J.R. Tolkien, right? His massive books. I don't think they hold anything to my 2-page little book of instructions, but that's good. We try and keep things simple. We don't want it to be too overly complicated, because like any system that's too complicated, you're either not going to want to stick to it or look at it, or you're just not going to get it. It's going to be like, here, read this encyclopedia before you go trade. How about we just read about 3 pages, and then you can go trade, and then you can start making some sense out of it. All right, guys, well, we're going to be wrapping up there. I think we kind of did a little good demo, and now we have some material to work with. I look forward to seeing you guys tomorrow. Thanks again. Take care.